In this video, I'm going to answer your top 10 questions about 1031 exchanges. Number 1, what qualifies for a 1031 exchange? First thing, it must be real estate held for investment. That doesn't mean just any piece of real estate. It means that your intent, and you've shown it on your tax returns, that it's held for investment. Number 2, can I live in the property that I bought with the 1031 exchange? Well, the answer is mostly no. The reason being, if you're living in it, it wasn't held for investment. Although some of you think your personal residence is held for investment, really, you have to show it as, on your taxes, held for investment. Number 3, how long do you have to hold a 1031 exchange property? The rules are somewhat unclear, but the accountants that we use tell us a minimum of 2 years. Once in a while, we'll hear 1 tax year and 2 calendar years, but best to ask your specific accountant for their suggestions. Number 4, is it worth doing a 1031 exchange? You have to ask that question yourself, knowing what your taxable event will be. For someone who has a tax of $10,000, maybe it's not too important. If they have a tax of $400,000 or $500,000, maybe it's a little bit more important. But you know your budget, you know your needs, and maybe this year's a good year to take taxes. Number 5, do 1031 exchanges apply to my primary residence? Well, remember what the code says. It says property held for investment, and the IRS does not consider your primary residence held for investment. However, there is another code that works for your primary residence, and that is IRS 121, which allows you to save your capital gains taxes on your primary residence if you've held it, lived in it, and owned it, and held it for a minimum of 2 years out of the last 5. And you save lots of money on your capital gains taxes that way because you exempt part of your capital gain. For one person, it's $250,000. And for a married couple, it's $500,000 of your gain. And that saves quite a bit of taxes. The reality is you could also do this every 2 years if you want. There's no limit as long as you've owned and lived in the property for a minimum of 2 out of the last 5 years. Number 6, what qualifies for a like-kind property in a 1031 exchange? What a great question, because it's fun. A like-kind property in a 1031 exchange is real estate held for investment, but it can be an office building, it can be a farm, it can be an apartment house, it can be bare land, it can even be an oil lease. And so it depends on what you are trying to accomplish in your exchange. Number 7, which type of property does not qualify for a 1031 exchange? Some of the properties that do not qualify are properties that are not real estate oriented. For instance, you cannot no longer save capital gains taxes on the sale of your antique Corvette that you've been fixing up for the last 25 years and definitely have sold for a much higher price than what you paid for it. You can no longer have capital gains taxes versus ordinary taxes, which we know are higher, on your jewelry that you sell or your painting or some of the other personal property types that you might have and that you want to sell. Think antique books, think websites, think something like that, and those do not qualify. If you sell them and make a profit, a gain, even though it's not capital gain, you will pay taxes as ordinary gains. Number 8, what is the timeline for a 1031 exchange? When people ask me this question, they usually mean, when do I have to close my second property or properties? And what this first timeline is really, you have to close within 180 days after you've sold the first property. But the first deadline, which is really a very significant one, is you have to designate the property or properties within 45 days after you've closed the first property. And it's really, really important to coordinate this because they are absolute deadlines with the IRS. Number 9, can you do a 1031 exchange with a second home? Well, the answer to that depends on how you've defined your second home in your tax return. Some people call something a second home for their financing, but they don't actually have a property they're living in. They're actually renting it out, either as an Airbnb or they're living in it a very short time during the year and renting it out the rest of the year. There are definite rules on the difference between a second home and a home held for investment under the IRS code. If you live in it less than 2 weeks out of the year, then very possibly it could be considered a property held for investment. Again, you need to follow the rules on how you are actually filing your tax returns for at least 2 years. Number 10, what does a 1031 exchange mean for a seller? What I found is that many sellers of real estate have found that the buyer intends to do a 1031 exchange. And does that affect them? Usually not, except to sign a document to recognize that the property is really being sold to a third party or a QI. And that doesn't usually affect the seller of that property. On the other hand, if you're a seller who then wants to do a 1031 exchange, of course it affects you, and we've talked about that in numerous videos. And check out this next video for more great tips. I'm Maxine Golden, your 1031 exchange lady, helping you to save money on your capital gains taxes.